Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me for this segment, we have Lewis Black, CEO of Almonty Industries, and Roshan Pujari, founder and CEO of Nasdaq-listed Stardust Power. We're here to discuss America's critical shift in energy, metals, and minerals, and the need for policy alignment. It is great to have the both of you with us. Welcome back to Trade Talks, Lewis, and refresh the audience here. Give us a brief overview of where Almonty sits within the metals and energy space.
Good afternoon, Jill. Thanks for having me back. Almonty, we're the primary source of tungsten outside of China, Russia, and North Korea. So we're really at the sort of front end of everything that's going on. And we are in the process of reopening the world's largest tungsten mine as another one of our additions to our staples this year in South Korea.
Yeah, and Roshan, tell us about Stardust Power and where you fit within the ecosystem.
Happy to, Jill. Thanks for having me and pleasure to be on Nasdaq Trade Talks. At Stardust Power, we're building one of, if not the largest lithium refineries in North America to provide battery-grade lithium to supply the energy transition and energy storage systems.
Yeah, and it's interesting, Lewis, you were back on the show with me in September 2024, so even just, less than a year ago, and you had made the comment around America's reliance on China for tungsten, and you recognized that as a national security concern. What are your thoughts? Has anything changed since we have the new administration in place? What are some of the regulatory and political hurdles that that's top of mind?
Well, unfortunately, yes, I was correct, which is never really good. You'd like to be correct on the good stuff, not just the bad stuff. There isn't really a regulatory issue regarding tungsten. There just aren't any mines. And so therefore, there was never any plan B. Everyone was very comfortable getting 90% of their requirements from North Korea, China, and Russia. And now, of course, that's obviously changed. But to open a mine is 8 to 10 years in a democracy. So it's the regulatory area hasn't been a big, it hasn't had a huge impact. It's just that there was never a plan B. And this is something I mentioned when I was on with you last.
Yeah. And Roshan, I mean, you note that as well. It's navigating the complexity. These are, for anything in the energy complex, these are capital intensive projects that require a lot of time, patience, and the regulatory hurdles are, again, complex.
Yeah, that is true. And, this is a place where America and North America can ascend to its leadership status again. Previously, America was a leader in critical materials and manufacturing and production, and we can get there again. There's ample capital in the capital markets. We just need to have the political and economic will to start onshoring domestic manufacturing.
Yeah, and one of those complexities, Roshan, is having that policy alignment. I mean, we need that just to, even kickstart these projects or understand what that framework looks like.
Yeah, that is true. And, it will require the support of the government, public-private partnerships. We see a lot of political tailwinds behind creating these facilities in the U.S. But with changing narratives, changing policies, it's very hard to get a clear and consistent view. But with President Trump and the administration, they've made a priority on securing American energy dominance.
Yeah, and Lewis, it makes sense when you think about it in the context of the U.S. and Trump's administration wanting us to be the #1 innovators in emerging technologies such as AI, and that's where you're seeing that demand surge in metals. This is something that not only is a national security issue, it's a race to the top when it comes to innovation as well.
Well, no, I mean, you can't make bread without wheat, and ultimately, the U.S. had a huge resource, infrastructure during the Cold War, but that's sort of migrated away. A lot of the mines were played out. A lot of the areas are now in you couldn't possibly mine in. It's now catch up. I mean, China hasn't just done this starting last week. This has been going on for 30 years. So this is going to be a long and bumpy road to find more balance in the supply chain. If you really want to develop these, AI solutions, you're going to need raw materials to feed into it. And that really is the front and center problem.
Right. And Lewis, that's really what the paradox is too. We openly have, a tariff war going on with China, but we are dependent on foreign sources to be able to, supply this demand. It makes you, how do you prioritize that? Right, it's a challenging balance act.
No, of course it is, and I think China is the primary source. I mean, in tungsten's terms, as I said, 90% is from China, Russia, and North Korea. But obviously, with the Ukraine, Russian materials stopped going through the EU and now flows through China. So they are now the de facto king of that metal. And yes, the tariff war is creating an issue in the regard to the fact that we are very dependent entirely on the benevolence of China to provide this material. But they drew first blood because in February of this year, they banned the export of tungsten. And so this escalation has been ongoing. And at some point, the Band-Aid has to be ripped off. It's unfortunate, but we're going to have to go through this to find balance on our side of the fence.
Right. And Roshan, tell us about Stardust Power, your lithium refinery. You are in a position to be able to manage this shift in what's a very dynamic environment.
Yeah, that's right. What we see in the lithium space is America is blessed with a lot of lithium reserves, potentially the fourth largest in the world. America has a lot of brine lithium deposits coupled with a robust oil and gas production society. What the critical gap in the infrastructure is in midstream refining capacity. So we're building a really large refinery and the technological optimization is to allow for multiple sorts of lithium brine input so we can aggregate supply and scale manufacturing. And that has the added benefit of really becoming a linchpin of North American policy because we allow upstream production to come online and have a place to send their products.
Yeah, and you make a really great point here too, that AI's role and the usability that it has when it comes to predictive technology. This can be harvested and leveraged to be able to forecast metals demand and predict these shifts more efficiently.
Agreed. The impact of AI will be substantial in multiple facets, and not only for demand, but for increasing efficiency on production. And as we see the uses of lithium-ion batteries grow from not just EVs, but to energy storage systems, always handheld electronics devices, it's creating a really robust demand profile.
Yeah, I mean, not that we need to insert more market volatility this week, and the past couple of weeks have certainly exemplified that, but with the demand surges and the market volatility that AI-driven demand and critical metals represent, there are opportunities there, but there certainly are challenges.
There are. And, a lot of the things the tariffs, wars, or whatever we want to call it is showing us is that we need to produce domestically and insulate ourselves from this market and geopolitical volatility. So renewed interest in building these facilities in North America.
Yeah, I mean, Louis, we really are at a unique crossroads for the U.S. And our future within the global metals market, not just for infrastructure and critical infrastructure, but being able to drive these innovation and technology strategies moving forward. If this really is a pivotal opportunity.
No, I mean, I think what's really important is that people ask, how did we survive for all these years with the onslaught of China and cheap tungsten? And it was because we developed technologies to allow us to compete. And I think that's a really important point, is that the US supply chain, as it's now evolving, as it's now developing, has to also be commercial and have to be able to face the sort of threats head on. It can't rely on government support forever and a day. China got to this point because they had huge government support. But this innovation is going to be key to be able to take on state subsidized competition head on. They're not going to require this ongoing continual support. And one of the issues China has now is that support is now been coming to an end. And as we've seen that, we've seen prices rise dramatically. We've seen export bans. We've seen a lot more aggression from the main supplier in our sector. And I have to believe that part of that is because they are also running on empty or not near empty in their own reserves.
Yeah, well, it's going to be interesting to see how the leadership in the administration takes advantage of the strategic moment, because this could be pivotal in terms of securing our energy future, our economic competitiveness. So, I'm sure that the hopes are that we don't have to continue with these tariff conversations every few years and having to jockey for that dominance. It feels as if it's as pivotal now than it's ever been, even with those, supply chain shocks that we had to contend with almost immediately with COVID. This feels as if there's almost more at stake here.
Well, the supply chain knocks started, we saw them in 2008, because one of the things you saw in the financial crisis was that China canceled all supply contracts under a force majeure, claiming that national security was in fact a force majeure, which of course is an interesting interpretation of a force majeure. And at that point, a lot of my customers realized the game was up. They'd had almost 20 odd years of cheap raw materials. They'd grown, enormously because of that. But when those contracts got canceled, they realized the future of the relationship was already in doubt. And so this is not something that's just happened since COVID. This has really been around in evidence since the financial crash in 2008.
Yeah. And Roshan, to wrap up here, are you seeing U.S. companies step up overall? Have they dialed back on investments because of the heightened volatility in the market, or is this something that they're committed to longer term?
Well, in lithium especially, it's been an interesting market, although the commodity prices are down, which has maybe dampened future investment into the space. So we don't see a lot of production coming online in manufacturing of battery-grade materials. Certain companies like Exxon are moving forward. So now in these times, even with commodities prices, it's important to be investing into supply chain. So, which is why at Stardust Power, we think it's a great time to be developing and building our facility. And even without the trade wars, there is an underlying geopolitical threat that would still endear us to building these facilities domestically.
But sorry to jump in here, Roshan, but a quick question. Sorry, Jill, but we're talking about commodity prices are down. Some are down and some are actually up. So we look at the antimonies, we look at the tungsten, they're going up because of these restrictions. But I mean, what is your feeling? And sorry to ask a question. I know I'm not meant to be, but
No, of course.
I mean, one of the things that we've tried to do is spread the price risk cost, that risk across the supply chain in its entirety. So our supply contracts have hard floors, no cap on the upside. The basis being if China does what they've done to, say, lithium or rare earths recently, which is oversupply, they protect their market share by keeping prices at lower levels. What are your conversations with your customers about finding a way of spreading that price risk? Because to develop a supply chain requires not just us as producers, but an entire plethora of industry consumers. So it's important everyone comes together on this. So what are you seeing, Roshan, with that?
Yeah, great question, Lewis. And I'll limit my answer to lithium because that's really the sector that I know well. There is a de facto premium on American manufactured goods, not only to limit political volatility, but potential IRA benefits. So there is a huge demand to be sourcing domestic battery grade lithium to solve all of potential risk. And so there is a huge demand for that from the customers. And I think everyone in our industry sees the deficit of production in 26 and 27 and where the cost curve and increasing prices are. So there is a huge interest in securing these resilient supply chains now.
Yeah, and Lewis, actually, let me ask you that question in reverse. What are you hearing from your perspective, whether it's specific to Almonty or from peers within your industry?
Well, to be honest, it seems only we've been able to attract hard floor contracts with no cap on the upside. So at the moment, we're one of one, but then we're pretty much the last man standing anyway. So that's not perhaps such a surprise. But I would say in my sector, because of the sensitivity of tungsten, especially in relation to defense, because it's a primary metal for all armor and all munitions of all calibers, is that there are two schools of thought. There's the public one where there's no problem, everything is fine, it's all going to be all right on the night. And the other one is blind panic because there's no plan B. And the problem is you can't really visibly be seen to be panicking because, well, with defense, it's a problem. If you feel that you're going to struggle to be able to produce your munitions and your armor, it could perhaps send a project weakness. And at the same time, it may also say to competitors who do have access, i.e. in China, that you could perhaps your market share could be starved from you. We've seen China being much more aggressive, not on pricing, but on procurement. They've been voraciously consuming Western concentrate in tungsten last year and into this year. They appear, rather than bringing price down to protect market share, they appear to be doing it more to starve my customers. And that's a very different approach we haven't seen this before from China.
It's a very different conversation, and you could look at it in different ways and try and read between the lines what's more perceptively out there. So I appreciate you bringing that up and appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.
Thank you, Jill.